The Radical. Fundamental principles of freedom, rational self-interest, and individual rights. This is the Yaron Brook Show.
Hi, everybody. Welcome to Yaron Brook Show. Hopefully, everybody's having a fantastic week. It's already Thursday, March 23rd. I didn't do a show yesterday. Just schedule got completely messed up and couldn't find the time, so I apologize for that. I know some of you look forward to these shows, so I apologize for disappointing. Jonathan, thank you. It's great to have Jonathan start off our support for the show here with a sticker, and Sylvanus, thank you as well. All right, let us jump in. As you know, the Fed yesterday, as you probably know, the Fed yesterday increased its key interest rate by 25 basis points, or 0.25%. This was what the markets anticipated, although just 2 weeks ago, the consensus was that the Fed would increase by 50% in order to fight inflation, with the idea that the inflation numbers were still high and that interest rates need to go even higher. The economy slowed down even more so that inflation pressures would be mitigated. So in the battle with inflation, the consensus was, at least 2+ weeks ago, that the Fed would increase by 50%, by 50 basis points. As a consequence of the banking crisis and the problems with banks, some were speculating that the Fed might not increase interest rates at all, and by doing so, try to help the banks. At this point, banks are hurt with interest rates rising because that hurts their investment portfolio. But the Fed, the Fed decided to, split the baby, to go half-half and take the 50 basis points and the 0, those are the two targets, and go 25 basis points right in the middle. Market seems to have liked it. The NASDAQ, S&P are all up today. But banks don't like it. Bank stocks are being pounded again today and are down today quite a bit again. So a split in the market, although, you know, again, if you understand the economics and how all these things are connected, there's no world in which banks doing really, really badly is good for the S&P 500 and NASDAQ. So this divergence is a little questionable, but clearly money is flowing out of investments in banks and into investments in pretty much anything else, and that is driving markets right now. Did the Fed do the right thing? As I've told you many, many, many times, there's no right answer to that. I don't know. You know, this kind of central planning is ultimately, it's impossible to do the right thing. You can do more damage, less damage. 25 basis points, you know, seems to be, they guess at less damage. If they'd gone to 0, the markets would have accused them of not taking inflation seriously. If they'd gone to 50 basis points, that would have been viewed as them not caring at all about the situation of banks. They did indicate yesterday that it looks like they won't have to raise interest rates much more. They believe at this point that inflation is under control. We will see if that is true or not. And that maybe another 25 basis points increase, but that might be it for the year. This is again a major change from what the Fed was saying just about a month ago, when they were expecting significantly more increases, and they expected inflation was a lot more stubborn than what they thought it was going to be. So things change, and things change very quickly as data comes in from the world out there, and as the implications for the route in banking in a sense to the real economy once those are factored in. So the Fed is doing what the Fed does. It's trying to use its whatever mathematical models to make the best estimate that it can and do the least damage possible. Of course, the cause of the entire banking crisis and the cause of inflation is the Feds and the Trump and Biden administration. It's a response to COVID. It's the massive influx of money massive increase in government debt. It's to some extent the monetization of that debt, if you will, by the Federal Reserve, by buying all those bonds and facilitating massive liquidity during the financial crisis. These are the causes of inflation, the causes of the banking crisis. So the root cause of everything going on wrong in markets right now, and in your cost of living right now, and the fact that it's much more expensive to live in America today, and in the world really. All of that is caused by government, and we should never forget that. What the Fed is trying to do is undo the damage it has already done. The federal government doesn't seem to eager at all to undo the damage it's doing. No move, whether by Democrats or Republicans, is being taken to reduce the deficit, to reduce government spending, to signal a seriousness about deficit control. Nothing. So what I want to emphasize, two things I always want to emphasize when talking about the Fed. One, nothing they do is right. It's just a question of how wrong are they. And second is the crises that we're facing, the problems that we're facing, the challenges we're facing from an economic perspective are the result of government action. And the tragedy is, of course, that nobody seems to care. Nobody seems to act on it. Nobody seems to derive any conclusions from this about the role of government in our economy and what the role of the government should be. If anything, the calls are for more regulations, more controls, more government intervention. So if we're talking about the government causing problems, I think, again, it is really, really important that we look at the current banking crisis and try to identify at least some of the causes for it. And again, I think you will find that many of these causes, or all the causes, are basically government. We talked about the fact that government, because of deficit spending and printing of money, caused the inflation, which caused the interest rates to rise, which has caused the investment portfolios of banks to decline, and therefore the value of their assets to decline and their liquidity to decline. And that is basically a major source of the bank runs and a major source of the problems within banking. But that was well known before the collapse of Silicon Valley Bank. And that in and of itself does not explain what happened, and it certainly doesn't explain what happened to, for example, to Signature Bank in New York. So today there was a fascinating article published in Pirate Wires. I like Pirate Wires quite a bit. It is a Substack, an alternative. They are positioning themselves as another alternative media source. They have reporters, they have opinion writers. They're positioning themselves as a media source coming out of Silicon Valley. So Pirate Wires is written by somebody who is I think a partner, but a senior guy at Founders Fund, which is Peter Thiel's venture capital arm. But they are building out, if you will, a media source, and they're quite good. I don't agree with all the opinions. I don't agree with all the way in which they spin certain articles. But overall, another valuable alternative media source, together with Barry Weiss's, together with the Dispatch, together with a bunch of others that I follow out there. Pirate Wire is the most interesting one when it comes to tech and crypto banking, and AI and other tech issues. I highly recommend it. So if you're interested, piratewires.com, you can find it. Piratewires.com, you can find it there. As to the name, it has a certain anarchist implication. I don't think that's what they're going for. Okay, so I just posted a link to their latest article. The latest article this is the title, and this is why I wanted to talk about it in post. The title of the article is, "Did the government start a global financial crisis in an attempt to destroy crypto?" And the author, Nick Carter, is trying to make the case that it is regulators and politicians like Elizabeth Warren who basically created this banking crisis as a unintended consequence of their attempts to shut down the crypto space and to shut down the relationship between banks and crypto. In a previous episode, I can't remember when, a month ago, a few weeks ago, I can't even remember time anymore. I told you about Operation Choke Point 2.0, which is basically what this is being called, and that was also from an article from Nick Carter from back and then 6 weeks ago. He posted that 6 weeks ago, and I talked about it about then. 6 weeks ago, I reported on a bunch of different things that the feds were doing in order to try to separate banking from crypto. First of all, they were not approving any kind of new crypto banks. There was actually a new bank that had asked for a charter and tried to get a charter, which part of its business plan was to have a 100% reserve requirement. So 100% reserve, so they could beat all bank runs, no problem. And yet their charter was denied. A number of banks, a number of institutions that had done any kind of financial transactions for crypto were being pressured, shut down, and heavily influenced. As part of that, you probably know, we talked about it at the time, but it became even more acute. There was heavy pressure on Silvergate, and there was a lot of talk, and Elizabeth Warren's office was involved in attempts to try. Silvergate is a bank that banked crypto and was known as the crypto bank. It was a small community bank from Southern California that started to get into crypto in 2014 and had a lot of crypto deposits. Now, again, when you have deposits, that doesn't mean you're not invested in crypto, you're not buying crypto, you're not holding crypto. Those would be pretty unstable assets for a bank to hold. They were just banking. It was just a banking relationship. If you started a crypto company, you typically opened a bank account with Silvergate. They were open to that. They also provided a platform for exchange of crypto into US dollars. So they provided services to crypto companies, and they provided an easy way to get in and out. Anyway, starting in January, there was heavy pressure on Silvergate to shut down its crypto relationships. Of course, shutting down the crypto relationships, or there was heavy pressure that these relationships were going to be investigated, that these relationships were somehow not kosher, that these relationships were somehow bad. Now, remember, crypto in the United States today is a legal business. Technically, there's nothing wrong with me having a relationship with a crypto company. And as a bank, there's no reason in the world, it's a legal business for me to have a banking relationship with a legal business in the United States. It's not illegal. It's not even questionable like, let's say, marijuana dispensary or marijuana growers, where it's legal on a state level and not legal at the federal level. No, crypto is legal at every level. And yet, dispersion was the political class put pressure, and the regulatory class put pressure on Silvergate, put pressure on the crypto community. And what happened was crypto was starting, was leaving Silvergate. Not that they have an alternative, but leaving Silvergate. Ultimately leading, and I spoke about this on a previous episode, ultimately leading to Silvergate voluntarily closing in the first week of March, which is the first bank in the series now of banks that are being shuttered. But this is all an issue of, Silvergate was not bankrupt. Silvergate was not insolvent. Silvergate was pressured basically ultimately to shut down because it dealt with clients, the government, our government, American government, outside of the rule of law, ignoring the rule of law, dismissing the rule of law, decided were unacceptable. And therefore forced the financial institution to liquidate. Now, there were all kinds of issues with Silvergate relating to FTX and so on, but nobody accused Silvergate of fraud. Silvergate took a hit because of FTX. FTX is the fraudulent crypto exchange. But Silvergate was not its business model was not threatened, put it this way, the business model survived the FTX threat. And yet it was still forced, ultimately, to shut down. Now, what is interesting is in the wake of Silicon Valley Bank being shuttered Friday morning, which again almost never happens, it's usually they wait until Friday afternoon to shutter it, thus doing it in the morning, creating panic in the market. You know, we've already talked about Silicon Valley Bank. But then regulators waited until Sunday, which is truly unprecedented, to then decide to shut down Signature. Now, what stands out with Signature Bank? Well, two things. One is that it had uninsured deposits similar to what Silicon Valley Bank, less, but similar to what Silicon Valley Bank had. But from all accounts, Signature had withstood the run on the bank, was in okay liquidity position, given that the Federal Reserve ultimately guaranteed all its deposits. It looked like it could open Monday morning and would probably survive. What is the other thing that stands out about Signature? Well, the other thing that stands out about Signature is that 20% of its deposits were crypto deposits. And there is a real case to be made, and Nick Carter makes it in this article, and Barney Frank, a politician I despise, but who was on the board of Signature Bank, makes in interviews that he's had since the closure of Signature Bank, he's made the same case. The case is that Signature Bank was not closed because it was bankrupt. It was not closed because of the run on the bank, although all these things, the run on the bank gave them the excuse. It was closed, indeed, to send a clear additional signal to the world out there that crypto and banking did not belong together, that the feds, the regulators would not tolerate crypto, even as a deposit base, would not tolerate crypto as part of their deposit base. $4.3 billion of shareholder value was evaporated, just puff, went into smoke as a result of this. Shareholders will get zero. The bank was later sold to New York Community Bank without their crypto deposits, again emphasizing that you cannot have crypto deposits. Why? These are cash deposits. This is money. Legal business, legal enterprise. One wonders what New York regulators and the feds were thinking when they shuttered Signature. And I mean, the bank was not insolvent. And it clearly looks like the government overreacted, but probably overreacted on purpose, in spite of the fact that they're denying it, to send a signal. Now, here's the bottom line of this, because I want you to get the magnitude of this. And this happens, it happens not just in banking, it happens in other industries. It certainly happened in the auto industry by the Obama administration in 2009. This is a complete negation of the rule of law. This is saying that politicians and regulators, at their own discretion, at their own whim, can decide that a particular industry is unacceptable to them without going through a legislative process of banning this industry or increasing regulations on the industry or doing anything. At their own whim, they can destroy, they can eliminate this industry. In this case, their attempts at crypto. I mean, the whole crypto thing is interesting because Bitcoin and a lot of other crypto stocks are way up in spite of the fact that they're clearly under assault here. I wonder if the crypto investors are fully cognizant of what is going on and the implications of it. But this is a frontal assault on what they're doing, and it's a frontal assault that nobody seems to care about. Other than private wires, where else are you hearing about this? But this is a complete negation of the rule of law, one, by going after crypto, legal industry, and not through increased regulation of crypto, reevaluating, crypto as a security, although they're doing that, again, unilaterally without Congress. Crypto is being defined as a security and therefore falling under the SEC regulations versus being an asset or versus being something else. So massive, and you know me, I'm not exactly a crypto gung-ho about Bitcoin and crypto, but again, legal industry, people are putting billions of dollars into it. There's a lot of innovation. There's a lot of stuff going on. Who knows what'll come of it? And politicians and regulators unilaterally crushing this. So that's one aspect of rule of law, which is just horrific. A second aspect of the rule of law here is they can go into a bank that is solvent, but they don't like something about it. In this case, they have crypto deposits, or they didn't like the managers, and they can just shut it down with almost no repercussions. Now, I assume there's going to be a lawsuit. Bonnie Frank implied that there would be a lawsuit, but if you read Bonnie Frank, who was on the board, I mean, he's very clear that the bank was doing the right things, that the bank was not a crypto bank. The bank, indeed, most of its bank's clients were real estate companies. The bank was primarily banking multifamily real estate in New York. And the reason it had uninsured deposits was because these were big real estate companies holding massive deposits at the bank and holding them liquid so they could make investments and they could in and out. And they held more than 250,000 because they were big. And, in normal times, these are stable businesses. These are big businesses. It's not even, these are businesses that are unlikely to panic, unlikely to run on the bank. And there was some run on the bank on Friday before they were closed. But that had slowed down, and there was no indication that Monday was going to be disaster for them. And I've said this before, but the fact that Signature was closed on a Sunday created unbelievable panic, and I think created the bloodbath that was Monday. Black Monday, as I think in the banking sector at least it'll come to be known. So we have a situation where we've given unelected bureaucrats the power to, ultimately based on their whim, based on their preferences, shut down financial institutions, and we've given politicians and regulators the power to shut down or attempt to shut down whole industries. And this is devastating for this country. It's devastating, right? It's devastating for what we are, any kind of freedom and any kind of hope for true liberty in this country. I mean, this is a slap in the face, and it only gets worse because if you don't deal with it, this negation of the rule of law, they'll only double up on it. They'll only take on more and more power for themselves. So I think very, very, very bad what's going on in the banking space and in the crypto space for everybody, even those of you who might not be. As you know, I do invest in this space, and I have not done well in the last 10 years. It's been pretty nasty. But beyond that, anybody should be concerned about what's going on in this space, given the way the government is behaving, because this is just an indication of the kind of power just a senator like Elizabeth Warren has, by sending out letters, by threatening, by talking about this stuff. She has the power to drive markets. And that is super dangerous, particularly given her views and given her perspectives and given her viciousness and her willingness to go after people she dislikes, even at the expense of, quote, the economy. All right, I highly recommend reading if you want to get the juicy details. Reading, did the government start a global financial crisis in an attempt to destroy crypto? I don't think it's a full story. I think we will get the full story in the months and maybe years to come. I think we'll get a much better story on Signature if there's a lawsuit, and as that lawsuit goes through the process. Barney Frank suggested there might be a lawsuit, and he as a director had to be careful on what he was going to say because of the potential lawsuit. Said it might take years before we really know what happened. But whatever happened, it doesn't look good, and it doesn't look good for the rule of law in America. That's what I can say. Okay, so I've already posted the link to the Pirate Wire article. I will post it again in the chat, and feel free. And again, it's a Substack that's probably worth subscribing to. All right, a couple of quick ones. This is a story about, oops, where did I put it? I had the story here a minute ago. It's gone. Oh, not that. Maybe I closed it by accident and don't have it no more. There it is. All right. So, AI is the hot thing, as you probably know. And it's one of the interesting aspects of that is that whereas, I guess in the past, in the last 20 years, most AI research was done, or a lot of AI research was done at universities, PhDs in AI. You specialized in AI, you got PhDs, and then could specialize in it. Most of them, 80% of them, would go into academia. That has flipped completely. So as of 2020, 70% of all AI PhDs went into the private sector. The private sector now is by far dominating universities in terms of cutting edge research into AI, into investment into AI, whether it's Google, now Microsoft, and pretty much everybody else in tech is investing heavily. Venture capital is investing heavily. It's the one area in venture capital right now that you could raise a lot of money with. This technology is going to be embedded into software. So what's called generative AI, which is like the ChatGPT, is going to be embedded in Microsoft Office, in Google Docs, in Gmail, and in pretty much everything. I think ultimately in Siri, in Alexa, in everything will have ultimately this ChatGPT-like features. Every single one of the major tech companies has its own version. It's not clear who, we know of the ChatGPT, which is owned now by Microsoft and is embedded in Microsoft Search, but Google is going to come out with their own, and the Google product might even be better than the ChatGPT 4, which is everybody is saying is absolutely amazing, much better than even the version people were making fun of a month ago. The progress in this area is stunning. It's accelerating. Of course, there's already calls that this is being monopolized by big tech, and a handful of corporations now control this resource, and this is the most important resource in the world, and we need to break up big tech as a consequence. You're going to hear a lot more of that, and of course, big tech is hated right now. So there's a lot of energy around trying to break up big tech, and part of that energy is going to come from a concern about AI and the dominance with AI, and all the research money they're spending on AI. But of course, this is what really advances the world when private industry starts heavily invested in these kind of things, heavily investing in a technology. That's when you get the real breakthrough, and that's where you get the real progress and the real application for human life. Noah's asking how he asked a super chat question. Some of you can answer him there, but you can do it at the bottom. There should be a little $sign where you can press on that, and then you can follow through and set up an account and do it. It's pretty easy and pretty quick. I think a lot of people in the chat right now have done that in the past, so it's pretty easy to do. All right, so yeah, keep watching the AI space, keep watching the politics of it. And one of the things to pay attention to is, I think, given the amount of research dollars and given the amount of research brain power that is going into AI right now in big tech companies look for some significant major advances in the technology in the months and years to come. And when you start really extrapolating theoretically on what this could mean, it's pretty astounding. And what scares me is that we do not have a political class. We don't have a population, but certainly not a political class and a population that are anywhere near being able to understand this and be able to conceptualize what it means and be able to deal with this. And it's much more likely that we'll get panic. It's much more likely that we'll get hysteria and demonization than we will a rational response to a new technology that could change the world for the better. So it's going to be really interesting because, again, it's not just politicians. We get the politicians we deserve. It's the public, I don't think, has a clue what AI is, what it can do, what it can't do, what is possible, the jobs that it will indeed replace, the jobs that it won't replace. Our whole educational system is going to have to restructure given advancements in AI. Many of the jobs that we have are going to have to be restructured given the advancements in AI. But given that the educational system is government run, basically, how is that going to happen? What's going to drive that restructuring? What's going to orient people towards the kind of jobs that will exist in an AI world versus the jobs that clearly won't exist in an AI world? What's going to orient people towards the right kind of employment, the right kind of jobs, the right kind of education? There is nothing, and people are not going to discover it by themselves. So this is, this is a time where we need real thought, real focus on orienting the world around us to really a new technology that, again, has the potential to completely change the world in dramatic ways and relatively quickly. And yet, there is no energy behind that. There's no excitement behind that. There's no thinking behind that, except the startups who are trying to apply this as quickly as possible, but the consequence, in a sense, be damned, which is exactly what they should be doing. But we don't have a leadership, intellectual or political, that is thinking through these things and providing answers to the real questions that should be arising as a consequence of the rise of AI and its potential into the future. All right, let me just thank a few people. Catherine, thank you. Christopher, thank you. And Zach T, thank you. Those are all stickers with a contribution. You too can do that. A couple of dollars from everybody on the show right now would get us to the goal of 250. That's how we fund this show. That's how we make this show possible. Okay, two quick other stories, positive stories that I thought were just fun and interesting. I've been reading lately from environmentalists, but also from people watching regulatory agencies, that there is a lot of concern with something called forever chemicals. And I'm not an expert on forever chemicals, but these are chemicals that are don't break down. They don't break down in the environment. They don't break down naturally. They stick around, and because they stick around, they tend to accumulate. And even though probably in small doses they have no negative effect on human beings, in large doses they definitely do have a potential negative effect on human beings. And there's nothing you can do about it except ban the chemicals because they're forever. They don't break down, so they're there. You're stuck with them, and they're in water. They're in plastics. They're in the clothes we wear. They're in all this stuff. And of course, as always with these kind of environmental issues, I'm sure there's a lot of panic and hysteria about them. But when you read about it, there's some logic there, and there's some reason to worry, and there's some reason to at least think about solutions to this. Well, isn't it amazing that there's still people out there in the world thinking, using their mind to actually think? In Canada, of all places, scientists have discovered a new method to break down forever chemicals. So they've discovered basically a way to shorten the lifespan of these chemicals, break them down, make them harmless. It's a silica-based material. It absorbs a wide range of chemicals. Among these chemicals are these forever chemicals. And they absorb them and break them up, right? Every chemical is composed of molecules, different molecules, and they break those molecules up, and it goes away. So it turns out the forever chemicals are not forever. As usual, human ingenuity, the human mind, can, as always, solve these problems. So problems exist. Environmental problems exist. Health problems exist. Issues out there of relating to chemicals and health and human health and all exist. But instead of panicking, instead of jumping to banning stuff, instead of jumping to the solution that requires a gun, that's my gun, finger gun, the real solution is innovation. The real solution is using science to make life better, right? And in this case, you've got a silica-based material, new silica-based material that they've invented that does the job. Amazing, but not surprising. All right, one other quick scientific innovation which will create lots of controversy out there in the world. I don't know about among you, certainly not with me. But now for people who are using fertility treatment, undergoing fertility treatment, there's now a new sperm sorting technique which offers an 80% chance of parents being able to identify the sex of their baby. So you can select the baby's gender. I don't think you can select the baby's gender because there are 92 genders, so you can select its sex. Anyway, you know what I mean. So you can select the baby's gender in advance. And of course, this is massively controversial, but this is another little step advance in providing parents with more and more control over the baby that they're going to have. And it's, if you will, genetic makeup. And I think this is amazing and exciting, but a lot of people are really afraid of this, really, really scared. For example, people are afraid that all parents are going to want boys, and then there won't be enough girls to match up with the boys, and that creates social unrest because there are too many men, like exist in China, where there are too many men. There are probably lots of other concerns once you get into designing the DNA, design of babies, and all of that. But I think that's all. That is all doable. All right, it's all manageable. Put it that way. And great to have parents have more control. Randomness of nature, control of a human mind. I'll take control of a human mind. All right, let us see what we got now. Okay, so we're gonna go to Super Chats. We're like $100 short of our target, so not too bad. 5 $20 questions will get us there. That's, I think, doable, although we are running out of time, but I will do these quickly. So just $20 questions, no $5, $10 questions, but you can do stickers. Just to support the show, you can do stickers. Now, I'm going to start not by the order of the questions we received this time, and all the questions are $20, so I'm not going to go, so there's no 50 that gets first dibs. But I'm going to go with Noah. I haven't noticed this feature before, but now the chat lets me know when somebody has done their first Super Chat ever. And we have our first Super Chat ever from Noah Smith. So in celebration of his first Super Chat, I figure I'll answer his question first, and then I'll get to the rest of you guys next. All right. Noah says, Yaron, what do you say to people on the left who say the profit motive is counterproductive in the medical industry or fire department? Medical industry wants sick people in order to make money, etc. I mean, I find that utterly bizarre, right? So let's say that were true. Let's say that in a free market, there was this perverse incentive for doctors to keep their patients sick so that they keep coming to the doctor. And you as an entrepreneur identified this. Ooh, these doctors, they keep keeping their patients sick so that they keep coming to them. And the whole medical industry seems to be structured around keeping people sick so they keep coming to them. How would you make money off of that phenomenon? What kind of competitive product, for example, could you offer to undermine that strategy? And by the way, this is an illustration, I think, in everything. There's always ways when there is what perceived to be kind of an inefficiency in the market or something that creates perverse incentives. In a free market, how does that get dealt with? Well, for example, I could offer my medical services as pay me a fixed fee every month as long as you're healthy. And I will pick up all the costs when you get sick. And then I have an incentive to keep you healthy. Because as long as you're healthy, I just rake in your monthly bill to bring it in. Or for example, maybe the doctor has an incentive. I mean, I don't think any doctor really has this incentive, but let's say the doctor has an incentive to make you keep sick. And let's say the hospital has an incentive to keep you sick. Who pays the bills in a free market healthcare system? So one option is to flip the incentive on the doctor and create what Jennifer's calling a health maintenance plan, right? And doctors do that, and it's possible, and there's no reason not to do that, and the doctor could reinsure against catastrophe. I mean, there are all kinds of ways in which you can make that market work. But what's the other aspect of it? Let's keep our existing system where we only pay doctors when we get sick. But how do we make sure that the doctors don't keep us sick? Well, it's called health insurance. Health insurance companies have a strong incentive to not pay out health insurance, to make sure you don't get very, very sick. Because it's only when you get sick that the health insurance pays out, particularly if the health insurance is based on a a catastrophic health insurance. Then that catastrophic health insurance has a huge incentive to try to prevent you from getting cancer. It has a huge incentive to try to prevent you from getting heart disease, to educate you about the risks involved, to maybe give you, in a free market, right, to give you significant discounts if you wear an activity, like a Apple Watch or something like that. And if the insurance company can monitor that you're actually exercising, and the more you exercise, I don't know, based on a particular exercise regime, your insurance costs are lower, so that you encourage you to be healthy, so that the insurance company offsets the incentive the doctor has to make you supposedly sicker. The insurance company has this incentive to make you healthier, and that's how it works. So there are multiple mechanisms by which a market will result in you getting what you want as a consumer. And what you want as a consumer of healthcare is healthcare. What you want as a consumer of healthcare is health. And if that's what you want, the market will structure itself in a way to provide that. And that's how markets work. And I just gave you 2 examples of how that would work. And there were a million of others. And the reason it doesn't work today is because of regulations. Quickly, the same principle would work for fire department. I'm not going to run through it now because I don't have the time. But the same principle would run for a fire department. The insurance has an incentive not to have fires, even though the fire department supposedly have an incentive to have fires because then they get paid when the fire's out. But these places are insured. It might even be that the insurance company owns the fire department, and therefore the insurance company might own the fire department, which would make it align all the incentives. Both the fire department and the insurance company have an incentive to minimize fires, therefore, and minimize the cost of those fires. So insurance companies would own fire departments. All right, that's just a quick answer. You could write a whole book probably about it. All right, Ian says, and by the way, we're only $43 short of where we need to be. Ian says, did you see the news about SVB that on Thursday they paid out $42 billion on the run out and ran out of money, and they tried to get loans from the Fed, but the Fed closed at 4 p.m. and shut them out? Well, I mean, that's not exactly right. On Thursday they ran out of, in a sense, they ran out of money. What they really happened was that they try to go into the private markets and raise capital. They had originally got commitments from a number of institutions and a number of private investors to provide them with capital. I can't remember the exact numbers, but provide them with enough capital to be able to compensate them for the losses they had taken on their loan portfolio, and therefore provide them with liquidity so that they can open on Friday and provide the funding on Friday. Okay, I'm going to get, I think you're confusing banks. I'm going to get to that in a minute. But once the world knew that they were raising capital, once the word got out, the people who promised the capital said, "Wait a minute, you know, we're not going to invest more capital in this. It looks like you guys are gone." And the next day, SVB was wiped out. But I think you're confusing it with Silvergate, because in Silvergate's case, it was absolutely true that they had a line of credit basically with the Federal Home Loan Bank. They had $42 billion of loans from the Federal Home Loan Bank. And it wasn't that they closed at 4 o'clock or something like that, but the Federal Home Loan Bank refused to renew those loans all of a sudden. This is, again, part of the Elizabeth Warren regulatory campaign to shut down Silvergate. They had the money from the Federal Home Loan Bank. They were going to flip it over. They were fine. Everything was going fine. And then the Federal Home Loan Bank said, "No, you have to return the money now." So they had to take money that they had saved to cover withdrawals from the account, and instead paid it to the Federal Home Loan Bank. And as a consequence, they decided to shut down because they didn't have any other sources to borrow money from. They had relied on the Federal Home Loan Bank, which does this on a regular basis. So I don't know if we're confusing the two stories, but Silicon Valley Bank was not basically, it wasn't a 4 p.m. issue. It wasn't anything like that. It was much more of a capital raise issue. The Godfather asked, "I think I'm dumb." The Godfather says, "I think I'm dumb. I don't know what money is." What is money? It is simply debt. This seems a narrow definition. And how is money developed and determined? So that's a big question. You know, so I'm going to give you the short answer for one of these shorter shows. But I will, you should ask it again in one of my longer shows or maybe somebody should sponsor a show on money and we can just do a whole show on money. What money is a medium of exchange. What money is, the definition of money is basically the common acceptable medium of exchange. It's whatever we use in order to exchange goods with one another instead of bartering. So gold was money for a very long time, and sometimes we use notes to symbol. You know, instead of moving around gold, we move around notes. But those notes in olden times, 200 years ago, 100 years ago, represented gold deposits. Gold was the money. It was the medium of exchange. Everything was denominated in gold, and we exchanged everything for gold. In modern times, money is that paper. It's just something that the government issues that for a variety of reasons, partially legal, and partially the fact that the government accepts these notes in exchange for your taxes, this is money. It's just paper. It's just paper. It's paper with a particular, just like a contract, it's paper with a particular designation that the American U.S. government has designated this as money, and therefore you have to use it. This is what you use in order to, as a medium of exchange, to exchange stuff. So you go into a store, they have to accept your dollars. That's what it means to be legal tender. They can't say, no, we only accept gold. They have to accept it. So it is legal tender by declaration of the government, by the fiat of the government, by the assertion of the government. That's what makes it money. And really, and the fact that we use it makes it money. So that's a simple explanation of what money is. Money developed as something that generally everybody wanted for a variety of reasons. In the case of this paper, everybody wants it because you can use this to pay the government, and you can use this to buy anything because the government has so determined it to be. But it developed as a way in which we can exchange goods instead of barter. Now, debt can be money, but it doesn't have to be. Most debt is not money. Debt, in order to be money, has to have a zero interest rate associated with it. So Treasury securities with a zero interest rate, during the zero interest rate period, just a few years ago, you could claim were money substitutes. That has gone as money because interest rates is high, and therefore it's now not money. And debt that is risky is not money. You know, there's a sense in which this can't default. The value of it might change because of inflation, but it's not going to default. You're not going to walk into the store tomorrow and say, whoop, nope, we're not accepting dollars. It can't happen because of the law, not because of anything in reality. So money is nothing mystical. It is the means we use for exchange. Richard says, I would like to learn more about private education. Would it be possible to set up a consultation, Zoom meeting with you so I could ask you some questions about the different financing methods and approaches to teaching? Sure, send me an email. We can talk about that. Generally, you can buy my time. I think for $500, you can buy my time. That's the time I give to as part of the monthly contributors who make $250 or above. So I think for $250, you can buy my time. $500, you can buy more time or more often. So we can talk about it. Let me know. The Godfather says, UNOS is the US Organ Donor System. The Senate called this a monopoly and said it should be broken up. I get how government creates monopolies in the for-profit space, but how are monopolies created in non-profit space? Isn't it the same way? Well, the monopolies created in the non-profit space is basically by saying they're the only ones who can do donor transplants. And monopoly here doesn't mean that they make excess profits, but that they limit access to these organs. Now, there is no marketplace in organs. They're not allowed to charge money for it. That's the problem. Organs should be, there should be a marketplace in organs that would solve the constant, almost constant shortage of organs. I haven't heard about breaking it up. That's interesting. I'm not sure what breaking it up would mean and how it would function. But what you really need is to privatize it. What you really need is to eliminate the prohibition over the sale of organs, and that would facilitate a much better, a much better system, and it would eliminate the shortage, which is what you should care about. All right, Richard says, what are the biggest difficulties with shifting an industry that is largely controlled by the government, like education? Competing with free government schools is very difficult, but something which needs to be done. Well, I think the best way to do that, I've said this on previous shows, is through government saving accounts. And this is a way in which the government continues to fund education, but does not determine curriculum, does not get involved in management, does not run the schools, does not insist on labor unions, so they give parents, this is a way to secure that poor people can send their kids to school. They give parents basically a stipend that they can only use to educate their kids, and then companies compete to get that stipend. That stipend you have to be able to roll it over, and once your kid reaches 18, you should be able to roll it into college education or practical, some kind of practical training education, trade school or anything like that. So it should be money dedicated for education. It's not a voucher system. It's because this allows for what do you call it? Private. It also allows for homeschooling. It allows for internet schooling. It allows for pods. It allows for anything that's education. It's basically you're literally given the money, not a voucher. A voucher needs government approval. You're given the money, put into a special bank account. You can only withdraw it for educational activities. There are a number of states that have these. They're not as broad as they should be, but it's education saving accounts. I think that's what I said. If I didn't say that, that's what I meant. Education saving accounts, not vouchers. So that's how you would do it, and over time, you would reduce the amount of those educational saving accounts that ultimately parents pay for it. But the initial step would be to just give them the money, and that's how you would transition from a public system to a private system, and provide an incentive for private schools to open and compete. And some states already are starting to experiment with this. Ian says, SVB running out of money. Check Matt Levine's Money Stuff newsletter from yesterday. What took time and the Fed didn't expend its own daily deadline at 4 p.m. PT, Pacific time, for collateral transfers to help SVB? Wow. I mean, okay. I mean, I believe it. It's more evidence of the complete incompetence and irresponsibility and craziness of the regulatory system that we have, and that we give power to a bunch of stupid bureaucrats who, whenever there's a crisis, completely screw it up. And you can go back to 08, 09 and see how big the screw-ups can be. And this is going to be a big screw-up. This is not a little screw-up. You all, every one of you who lives in the United States, and maybe those of you who live outside of the United States, are all going to feel this in one way or another. But the idea that they wouldn't extend the hours beyond 4 p.m. Pacific time is mind-boggling and infuriating, given the consequences, but also typical, right? Typical of government bureaucrats. All right, so we're $7 short. Somebody with a $10 question would get us over. Gail says, exactly always understand the root cause is government central planning. Absolutely. Frank says, you've said the country that invades another is the bad guy. Then is the U.S. bad for invading Iraq or Grenada? Is Israel the villain in invading Iran? No. I've said that with caveats. Oh, hopefully. Or at least I assumed that you understood the caveats based on the context. I've said this many times. Dictatorships are not legitimate. They're not legitimate. They don't have sovereignty. They're not legitimate regimes. And therefore, you, and Ayn Rand wrote about this, you have every right to invade a dictatorship. Whether it's a good idea or a bad idea, I don't know. So it's not like Iraq, and I spelled out Saddam's crimes. It's not like Iraq had legitimacy or sovereignty. It did not. Anybody could have invaded it. And not being, that wouldn't have been a problem. The question is, as an American, was an invasion justified? And for an American, the answer is no. Not because of the sovereignty of Iraq, but because of, you're sacrificing your own people for what? For sacrificial reason. So Israel is not, Israel attacking Iran is an act of self-defense. U.S. attacking Grenada, okay, you could argue it was an act of self-defense. I don't know the details, but potentially it was an act of self-defense. So if it's an act of self-defense, or if you're going after a country that is a dictatorship, illegitimate, then that you're not the bad guy for invading them. But if you're invading a basically free country, then you're the bad guy, no question. But the assumption is you're basically free. Ukraine, with all its problems and with everything else, was basically a free country. A country that invades a free country is always the bad guy. Oh, what did I do? Answer. Yeah. Frank says, isn't education on skill at showing the value in knowledge, showing what's important? Well, isn't education the skill? Well, it's two things. It's showing what knowledge is. It's important to show what is true, what the truth is out there, what are the facts, and then it's showing why it's showing how that's important. That is essential for human survival. So it's showing too what is and the method of achieving it, and why that is essential for your own life. So three things: the what is, the knowledge itself, the method by which to acquire it, reason, how to use your mind, and the value of that, i.e., that being a necessity for human survival. Okay, Richard says, thank you, Yaron. I've sent you an email regarding the meeting. Thanks for everything you do, and I greatly appreciate the morning shows. Great, thank you, Richard. Thank you, guys. We've reached our goal. We'll do, we've got a few more questions, and then we'll call it a day. Adam says, SS question, no SS Social Security under 40. Everyone, even newborns, can open a tax-free lockbox account in which funds can go in but can't come out until age 60. Yeah, I mean, that's one solution to the Social Security problem. I mean, you can come up with a lot of similar type of scenarios. You phase it out. Depending on age, you could just cut it off at 40. There are lots of different ways to do it. You'd have to run the numbers and see the monetary or budgetary implications of it. But yes, absolutely, that's the way to ultimately get rid of it. And ultimately, you want to get rid of the lockboxes because it should be your decision about what you do with that with money and how much you save, and whether you can take it out or not. All right, Josh says ChatGPT is incredible, huge value add at work so far. Really appreciate these new shows. Great, that's what I'm hearing. The ChatGPT, particularly the latest version we're seeing, is amazing. Bree says, how are you doing? It must be very stressful these days. Try and stay positive. Very stressful these days. I'm trying to stay positive. It is hard though. Daniel says, Yaron, I'm a bit concerned about your wine intake. Even just 2 drinks a week can degrade gray matter over time. Check out Huberman's podcast. All right. I don't know what to tell you, Daniel. It seems like 2 glasses a day, 2 glasses a week shouldn't have that kind of impact, but I'll check it out. I'll check it out. Maybe I'll have to give up wine. Who knows? Raphael says, hi, Yaron. Is there a way to find the amount of banking reserves in Canada and Scotland during the 19th century and compare it to the US and Europe today? I'm sure there is. The best source on this is Larry White and George Selgin. They've written a lot on the Scottish banking system and I think on the Canadian banking system. So look up the work of George Selgin and Larry White. They're the ones who specialized in the free banking era in those 2 countries. All right, just over an hour, longer than I want, but thank you all. Really appreciate the support, appreciate achieving our target. Thanks for the great questions and some of the good pointers to articles to read and insight. I will see you all tonight. I think tonight's going to be a fascinating interview. This guy I am interviewing is a young guy. He's really done a lot of interesting research on this issue of was there a civil rights movement in the 19th century during slavery? What was some of the anti-slavery movement look like? What were the arguments they were making? How do they compare to the modern civil rights movement? How do they compare to today? He's a young guy, but he's very articulate, and it's just material I haven't. We'll talk about, I hope, Reconstruction. What happened during Reconstruction? I find that Americans have no clue how bad things got after the Civil War for blacks in America. We'll talk a little bit about that, hopefully. But this guy knows a lot about this kind of stuff, and you don't get this material much out there in the world. So I hope you join me as I interview Isaiah Slade tonight. It'll be 8 p.m., not 7 p.m., but 8 p.m. East Coast time. It should be a fun interview. It should be really good. Yeah, join us, 8 p.m. tonight. Bye, everybody.